Hey guys, this is another look at ZB, starting here on the weekly log scale chart at left. It's been a while since the last video when we were over here in this fifth wave, and I was looking for counter trend trades down here because we were punching below this purple channel, underthrowing it, and the question was, here's the structure I've been looking at on the weekly chart. Quick and dirty Elliott wave. You can't see it on the weekly chart, but this was a clean three-wave move to get things started. So it looks like a nest of 1, 2, and then a 1, 2. Fours on the top of the channel, threes, and in this case, a wave 5 on the bottom of the channel. But this was not all of 5. This was apparently 1 of 5. So we have a 1 down, a 2 up into the measured move short. And we've gone 2. We dipped into the 236 target and we've traded an extension. We'll look at on the 2-hour chart. And we've gone to and through the 618 target of that extension. So this has just been extremely aggressive, straight down. Some traders that I follow, have followed for a long time, are saying that this is the bottom and that this is now a complete 5-wave move, that there's a 1, a 2, a 3 into the 236 target, the extension, and then we've captured the target of the extension. So let's look at that on the 2-hour chart. So here is the argument for finding some sort of intermediate term bottom in pretty short order, which is this. Right, the wave 1 down was the big wave 5 we're looking at. The wave 2 came up into the 50% retracement, which is this black line. We hung out there for what seemed like 5 seconds, and then we were gone. And what traded here on the yield chart was a highs to highs extension. This price came halfway back, and what the yield chart was trading was right here, this highs to highs extension on August 2nd or 3rd, drawn off of this high to high. And we've just ripped through every conceivable 618 target, so just straight up. And going back to the ZB price chart, this move started with a 5-wave move, 1, 2, 3, 4, 5, that looks like maybe a leading diagonal. We were in this tight little channel for over a month, which looks like a 3rd wave. And then we had a 5-wave move to end it, 1, 2, 3, 4, 5 into this daily weekly 236 target here. And that arguably could be all of wave 3, right? From a 50% retracement to the 236 target. And then we traded an extension off the bottom of that measured move, which is off screen to the left. And yeah, it dipped in on price. But what was trading on the yield chart, what was the date on that? Oh, that's the photo. The date on that was October 3rd and 4th. And what the yield chart was trading was October 3rd and 4th. It was trading another highs to highs extension. It dipped in like 15 basis points, I think, but it was coming off of this most recent high right here. So coming out of this extension, this looks like a 3-wave move into the most recent low right here. This 4th wave was a weak correction that came back. The top of this 4th wave was to the tick the same as the bottom of this potential wave 1 right here. And then coming out of this high here, 1, 2, 3, this looks like some sort of choppy fourth wave. This could be a fifth wave of a fifth wave going down right here. So we have a valid target at 115.20. This fourth wave traded as a next measured move in a series. So, technically nothing has broken yet. This wave still looks like a straight line, and we have valid targets below. So, stepping in front of this train and trying to catch a bottom right here is, well, you have to understand the risk and you have to limit and define your risk. But, if we punched out of the bottom of this channel, this big blue channel is coming off of the weekly chart, which was here, right? It's connecting 3 points of contact: the top, the bottom of wave 1, the top of wave 2, and we're punching out the bottom right here, right? So we're underthrowing this daily weekly channel. That is what this blue channel represents. And so if we punch out again, nothing says we have to capture the target down here this time, right? We could stop anywhere. This black line is simply a line parallel to the blue channel. ZB price does this, where it will punch out on third and fifth waves and find support or resistance at a stealth line that's parallel to the channel but outside of it. So we could come down, and actually the black line intersects with that 236 target right here on Thursday, which is I think that's CPI day this week, right? Thursday. Right. So if if the election eve or CPI data are catalysts, we could have a reversal right here. And so this is the case for that, a fifth wave down here. This is such a choppy mess that we could conceivably rally and still be in this black fourth wave right here. So we could go up, we could come down, and we could go up again and conceivably break this black resistance line channel right here and then make a new low. Nothing says it has to happen this week, but it would be simple and kind of nice if we were down here when these catalysts were happening this week and looking for a reversal. Is that everything I want to say about that? Yeah, so let's go back to the yield chart. On the daily time frame, I have been, trying to make some sense of this structure off of the all-time low over here. And again, quick and dirty casual Elliott wave. This is sort of the best I have right now. This initial wave up, on the ZB chart, it looks like a clean nested 1 2 1 2, but the same structure doesn't work on the yield chart. So this could be a 1 up, this wick right here that it's difficult to see, and then an expanded flat down into the 2. So it could be a 1, expanded flat 2, 1 2, 3 4 5 into this third wave. And then this fourth wave is trading as this highs to highs extension off the top of this third wave, and we've just ripped. In which case, yeah, this could be a larger degree fifth wave completing on yield as well as price. The alternative that I'm sort of looking at is this, where somehow this is a wave 1 up, and then this is the wave 2 over here, and so we have this nest of a 1 2 1 2 3 out of the channel, 4 into this same highs to highs extension, and then a 5, and we would be completing a third wave up here and not a fifth wave. And so the difference is, this is clearly a highs to highs extension in a fourth wave, but at what degree of trend is it? Is it this degree of trend, the smaller wave degree, or is it this degree of trend, the larger wave degree? It's the difference between completing a larger degree wave 5 up here in the near future or completing only the third wave. So, trying to catch a top in yields, trying to catch a bottom in price. This, it's not guaranteed that the third wave ended here, but it sure does seem like this was a lows to lows extension that traded. And at any rate, we'll complete something here, it looks like, possibly this week. It's just a question of at what degree of trend are we at. Is that everything I wanted to talk about here? I mean, we've just been going down in a straight line. So if we make a marginal new low this week, if we look at the time frames, we'll have a divergent low on every time frame. Right? A new low would give us a divergence on the weekly time frame, on the probably the daily time frame, and then between third, probably between this wave here and probably even on the hourly chart. So that's the case for finding some sort of swing low right here, with the caveat that we have this valid target. This is the 618 target of that daily weekly measured move, and it sort of lines up with the 618 target of this next measured move in the series. So if we go through the blue channel and the black potential support line and this 236 target, this would be the next zone where I would be trying to maybe catch a counter trend move, and that would line up with the yield chart capturing its 618 target. I think that's everything I wanted to say, more or less. I hope that was helpful. Thanks, guys.